The moving average convergence divergence MACD strategy is a very popular trend following momentum strategy that shows the relationship between two moving averages of a stock price. The MACD fast line is typically calculated by subtracting the 26-period exponential moving average from the 12-period exponential moving average. The MACD slow line is calculated by the 9-day exponential moving average of the fast line. The signal is very similar to the moving average crossover strategy. When the MACD fast line crosses above the MACD slow line, the signal is to take a long position. This is also called the golden cross and signal a bull market. On the other hand, when the MACD fast line crosses below the MACD slow line, the signal is to take a short position. This is also called the death cross and the signal a bearish market. Now, we shall implement the MACD strategy. The first few steps is identical to my previous videos of algorithmic trading, so I will not repeat them over here. We shall define a MACD function to implement the MACD definition as we just explained. We compute the 12-period EMA, then we compute the 26-period EMA, and the MACD fast line is calculated by the difference between the 12-period and the 26-period EMA, and the MACD slow line is computed by the 9-period exponential moving average of the MACD fast line. So we plot the last 365 days for the MACD, the fast line and the slow line. So we are supposed to get the signals when there is a crosses. So let's compute the signals. So we will go for a long position when the MACD fast line cross above the MACD slow line, and we will go for a short position when the MACD fast line cross below the MACD slow line. So this is very similar to the moving average crossover strategy that we discussed before. Next, we will compute the strategy returns as well as the entry points for the buy and sell, similar to the previous video. Let's look at the strategy performance. For the plot, there are a lot of trades. However, if we look closely on the buy and sell overlay to the adjusted close price, it doesn't really make sense because we have a few buy signals at the low point, and and we have a few sell signal at the low point also, right? So it doesn't really make sense. So we got a pretty bad Sharpe ratio 0 and a maximum drawdown of 94%. So I'm not too sure is there anything wrong with my implementation, since we got a pretty bad performance. So this conclude the video for the implementation of MACD strategy. The code for the MACD strategy can be downloaded below. The video on the moving average crossover strategy is also referenced below. Feel free to comment and share this video and subscribe to our channel. Thank you.